times have moved on. All right. I didn't do a podcast on Staar Surgical. Might have posted something back in the summer. It had broken out. Look at that in May 2018. Breakout on monthly chart. Look at a huge move away from 12-month moving average. Coming back close to it. Exploding again. And those wicks. Those are the scary wicks. Far away from the 12-month moving average. A lot of sellers. A lot of big wick coming in. Next month, down. Buyers coming in. But that's a big warning sign. Next month, smaller time frames. Oh, we're back in. But a lot of pressure far away from 12-month average. And when you come back down, the higher the ride, when you come back down, then you start hitting that still inclining 12-month average. And you really hope it's going to cushion you and bring you back up. So it has done that for a little while. It did that for January, February, March. But we're seeing March trying to go back away. But we're getting those wicks back. Wicks. And especially on big down candle days, not very good sign. So we're still in an inclining 12-month moving average. We closed barely below the still inclining 12-month moving average. We're at 35.02 is the 12-month moving average. We closed at 34. Those are signs, embryonic signs. So when we go on the weekly, we're probably going to see this in the stage 3. On the daily, probably start rolling over, and we're just going to time our entry. Look at that base. That is insane. Multi-decade base. And after that, just exploded, reached its target. That was a target, the measured move. And it got reached really, really fast. And look at that wick right here. Whoa. Far away from 12-month average. Sellers coming in. And that was a warning sign. A lot of people got trapped here. You want to buy when you're exploding out of the base and try to ride that. You could have ridden that for 6, 8 months. Buying here, too far away from 12-month average, no matter what happens, no matter how much you think you would have sold it, how much you think it's going to go high, it's just a higher risk proposition. Sometimes it does continue, like we saw right here. Sorry about all that moving. For another candle or two. But that's not the type of stock you want to be in. You want to be in going up slowly. All that emotion, that's just going to trigger stuff inside of you. And then you're going to hold on forever. You won't have your sell stops. When it comes crashing down, it could pierce through all your support levels. And you won't have a nice chance to get out, guys. All right. Let's go on the weekly, man. That's where it's going to get played. Remove all drawing tools. Did I do a mistake by doing that? I just want to see where my support is. All right. Monthly defined resistance. Monthly defined resistance right about here. So until we go back above that, nothing to see. And here is my monthly defined support. Right about here, go down, red candle, market said no, not going lower. That's the original one, and now it was tested once, twice, buyers coming in. So that's pretty much my zone right here that I'm going to be working with. Wait, let me go back. Maybe one more. Let's put back this multi-decade, or at least here, this breakout level right here. So this, we're going to start entering a zone of previous resistance turn support. So that's the vacuum we have. We could go all the way back down to this area right here. Man, Pat, what are you doing? I'm going to go back one more time. And I just want to see my measured move. Whoa. If we get a monthly pattern that works out, that morphs, I'm imagining that it could end up like this. The target would be all the way down here. It's going to sink through the wall, and then you have some natural support right here. And when I was doing just non-Stan Weinstein, I would actually move my target just a little bit up, just to make sure I don't get into this congestion zone, that I get triggered out right here before hitting this wall. Price action can sink through on smaller time frames and come back to close above this support, important support. So that's a swing rule. It gives you an idea of where this could slow down, but we're using it right now just as an indication that if we have a monthly defined confirmed breakdown, let's say price action goes here and goes here and then breaks down and actually closes below that monthly defined support, that the trend is in that direction. We have a monthly defined chart breakdown giving us a downwards target. So that's going to give us the weight, the direction of, we don't want to go against it when you're in the smaller time frames. Okay, that overperforming the SPX. Whoa, little arrow. So some warning signs, those red candles. But right now, this is what I'm looking at. Joe said that I don't want you anymore. All right, let's go back here. Where's my arrow? Get right here. We're starting to go. We're getting close to the zero line, underperforming the Russell. We're not quite there yet. That's why it's not red, the overlay. We are below declining 30-week moving average. So we're even a little earlier than some of my recent podcasts on stocks that are already broken down. Still have the Ichimoku cloud under us. It could really bring us back up. So we're not quite there yet, but we're below declining 30-week average. So in the next few weeks, and maybe next several months, I want the price action to start staying below that 30-week average. I want it to go and test that monthly defined support. If it has to bounce up and go hit that declining 30-week moving average, good. I don't want it to go back above. I want to be in this scenario right here. Lower highs, lower highs, lower highs. And after a few weeks, or maybe 1 or 2 months, then maybe a close below. No more Ichimoku cloud defined support. 30-week average really start to decline. And then we'd be going underperforming the Russell and hopefully entering on big volume right here. And what that's going to give me is on the monthly chart, we're going to be already, the more price action we have below that 12-month average, the more it's going to start turning down. So we're going to be right here. And when we break down, I have more trust in that breakdown than if it just goes down here violently. I want to let it coil up, and then somebody pulls the rug down, and then we go down and we slide all the way down. This is going to be a big vacuum right here, all the way down to the 17 levels, 15 levels. So Staar Surgical, high ride, don't get attached. You had some morning hit right here. You should have exited no matter where you were. When they get that close below that 30 average, you're not in optimum A++ settings. You were here. Look at that crazy volume on the weekly. This candle here was a telltale sign to get in. But the ride went really high, really fast. Unless you had some clues, unless you had a 3-point, 1, 2, 3 break on the fourth right here, you could have maybe taken half a position out. When it goes down fast, it's hard to really get to maximize those profits, but you would have still made here. Worst case, sell everything here, and you would have entered here. That's your profit right there. All right, Staar Surgical, you're on the hit list a little early, but that's the goal of it. You want to let the Russell really roll over. You want the economic data to really roll over, and you want to get these stocks ahead of time. You want to prepare yourself for those ultimate stage 4 breakdowns. All right, that's it. Ciao, guys.